A play that a swing trade that I just completed. So basically, what I mean by swing trading is that I'm buying a stock, I'm buying, a few shares in a stock for one price, and I'm going to turn around and sell it for more. All right, so this play is AA. I'm here on stockcharts.com. So if you come, hold on, let me give you a rundown. I bought 600 shares at $19 and 38 cents. I ended up making $4,400 off of it, a 39% return, right? So I spent about $11,500 to make $4,458 in profit. So check this out. Come to stockcharts.com. The RSI is an indicator that tells you that the price of the stock or the stock itself has gone up or down too far too fast. Anything above 70 is extreme. Anything below 30 is extreme. It'll light up in green like you see here. All right, so what happened was AA, it went green and went hot. I call this going hot. It went hot, so I can anticipate a pullback, right? So it starts falling. We don't know how, nobody knows how far it's going to fall. Once the stock starts trending downwards, nobody knows how far it's going to fall, but you're going to wait for it to find a bottom. And when I say find a bottom, I mean it's going to trade sideways for a few days. It's going to trade in a range for a few days, right? So you see, this is a range that is trading in for a few days. So this becomes the bottom. This becomes the level of support, right? If it breaks out of this and it goes any lower, then if it breaks out of this, it's likely to just keep falling, right? Nobody knows how far it's going to fall, like I said. So you just wait for it to level out. All right, you're not Captain Save a stock. Once it starts falling, let it fall. So once it breaks out of this box to the upside, then boom, you got some action. So you're going to set your price target at the previous high. So the stock fell from $25. You're going to trade with the theory or with the idea that it's going to go right back to where it came from, right? Or it will get back to where it just fell from. Price has memory. So when you're buying it down at this level, you're going to sell it back up when it hits 25. All right, a lot of people like to ask about time. Like, how long does it take? Nobody knows. This could happen in one day, but as you can tell by this calendar over here, this whole thing played out from the beginning of January to the end of February. So this whole thing took about 2 months from the time it started falling to trading sideways to moving back up towards the price target. It took about 2 months. So you don't know. There's a few things you don't know. You don't know how far a stock is going to fall when it starts falling. You don't know how long it's going to take to hit the price target, right? So you're buying with no specific time frame in mind. You're just whenever it hits, your target to sell, then that's when you'll get out of it. All right. So what happened is the price comes out of this box. It starts moving upwards. We hop in, right? I bought in around here at $19. All right, because it bounced off of out of this little range. It was trading in this range. It bounced out of this range. The histogram start ticking back up. The MACD start moving upward as well. So we're going to jump the gun. I usually tell people to wait for the 20-day RSI, but lately what I've been doing is finding other indicators or finding other, like using price action to jump into these plays before the 20-day moving average hits. If we wait for the 20-day moving average, we would have been buying it at $20, $21, selling it for $25, $26, right? So because we're using other indicators, because we're using price action, we're going to wait. We're going to grab it earlier. All right, so that's exactly what happened. We grabbed it here. I grabbed it down here at $19, and then it ran up. It hit the price target. So the way that you play this is when it hits the price target, you can sell 25 to 50% of your shares. So if you own 100 shares, you can sell 25 to 50% of them, and you hold the rest until the RSI goes hot, right? Because if it goes to the price target, it can go through the price target and keep going. So that's exactly what happened here. It went through the price target and it went to the RSI got hot. So you see the RSI is not hot again, which means we can anticipate a pullback. So we're trying to sell out of this before that pullback comes, right? So you could have sold, you could have sold half or a quarter of your position here at $25. Once you hit the price target, then you could sell the rest here. what I did was that's how I usually do it, but this time I just waited for the RSI to go hot, right? So that's exactly how it played out. You can tell, or you can guess, or you can estimate what your percentage return will be before you even jump into this, So if you buy it around this area and you sell it here, you can get a 30 to 42% return, depending on when you buy it and when you sell it, right? So, we're looking to get 30% returns here. If we can hit 30% returns on all our trades pretty consistently, then that's good. So that's exactly how it went. Played out kind of perfectly, man. This was a fairly simple one. But look with the MACD, man. Look at the MACD. This is what I want to teach you guys or tell you guys. Look when the MACD crossover. Look what happens to the price. All right. The price ran upward at the point where the MACD rolled, right? Or the MACD crossed. So the MACD crosses here. Look what happens to the price. All right. Look what happened last time the MACD crossed over here. What happened to the price? All right. So we're using other indicators. We're going to stack these indicators. We're going to use them together. So for example, this breaks above the 20-day moving average. The MACD crosses over. So now you got two strong signals to buy. And then the price ran from $12 up here to about $24. So here was with damn near 100% return if you're buying here. If you're buying here and you're selling here, right? 80, there you go, 80% return. So you can repeat this over and over and over again. Like you can trade the same stock multiple times, right? You can use the same indicators multiple times. So just know when the RSI goes hot, you can anticipate a pullback. Same thing on the bottom. When the RSI goes cold, you can anticipate a reversal. So you see here the RSI went cold. Look at the price. When the RSI goes cold, then it trades sideways. RSI goes cold, then it trades sideways, and then when it finally breaks out, it doesn't go just straight up, but it goes up and down, up and down, up and down. Eventually, it's going up. You can trade this from extreme to extreme. If you were to trade this from extreme low on the RSI, you see this is extreme low below 30. From extreme low to extreme high, look what kind of returns you can get, right? So these stocks trade in a pattern over and over and over and over again. So we're just trying to take advantage of everything that comes up. So price change. Let's look at this. From extreme to extreme, you got 100%, right? And this would have took from, the end of September to the end of December. So September, all of September, all of October, all of November, all of December. You got 4 months. You could wait this out 4 months. You doubled your money, right? Or you come trade it over here. I just traded it. You don't get 100% return, but you get a 40% return on your money. So if you started this trade with $1,000, you would now have $400. So that's the name of the game that we're playing. It's we're just putting some money up and we're trying to create money with money. Once you hit buy on this, there's very little for you to do until you have a signal to sell. So your signal to sell is that you hit your price target, you hit a stop loss, the RSI goes hot, right? So you set a stop loss on this. If you jump in at this point at $19, maybe your stop loss is here or, around here in this area where you could risk $2 per share to try to make $6 per share, or maybe you could bring up your stop loss a little higher. But that's what you're doing. You're not going to sell this until you hit your stop, until you hit your price target, or until the RSI goes hot, right? So this isn't something you have to look at your computer every single day and watch stocks all day, every day, right? You could set this up and forget about it. You come in, check in on some of your trades because you might have, 10, 15 of these trades going at once. So once you set this in motion, then, you just let it play out, man. And this is the return that, I end up having. I end up making $4,400 off of $11,500. Now what I could do is take my gain of 44.58 and then go invest into something that pays dividends, right? Buy some passive income, and then I can take that $11,500 that I put in initially and start a whole nother trade to try to repeat this cycle over and over and over again. Imagine if my $11,000 can create me $4,000 15 times a year, 10 times a year. I made $40,000 trading. You know, at that rate, I can make $40,000 trading if I can do this 10 times a year. Can I do this 10 times a year? Yes. But I'm going to have some losses as well. You know, you can do this 10, 15, 20 times a year. If you know what you're doing, you know what you're looking for, right? On a good year, you can do this 10, 20 times a year. On a bad year, you know, you're going to do this 10, 20 times a year, but you might have a few more losses. But this is how every time you create profit, you could take this money. Now, if I go spend all this money on something that pays me passively, then, you know, I could create $200-300 a year in passive income off of this one trade, and then take my original amount of money that I put in and then create another trade, initiate another trade. So I might take my profit at $4,400, and now I'm going to go look for another trade. I might go trade something like this. Boom. You see extreme low. Now we can just roll this and repeat the cycle. All right. This is extreme low. I have some shares here. So I'll just, you know, take my profit and I'll roll it over here where we're buying at an extreme low RSI. And then our price target will be, somewhere around where it fell from, right? We're just going to anticipate the stock to go right back where it fell from. All right, if it goes any lower than, let's say, $11.50, we'll sell. We'll set our stop there. So we might set our stop down. We might set a stop down here, but we'll buy shares and we'll just let this play out. All right, so that we'll take profits from one trade and move it to the next. And then we'll take, you know, or you could take your original amount, that 11,500 or whatever you put in. You could go buy some passive income with it. You could take your profits and then try to repeat this cycle again and again and again. All right.